Hello and welcome to another financial analysis video. Today I'm talking about Honeywell, who released earnings on Friday. And Honeywell beat earnings. They earned $1.60 per share versus $1.55 a share. But one thing that caught investors' eyes was the declining revenue. So Honeywell, on a trailing 12-month basis, over the last few quarters has had declining revenue. It's dropped below $40 billion and is now cracked below $39 billion. So there's a little bit of revenue drop going on there, and you have to ask yourself whether or not that is concerning. And while we're on this slide, the first thing I'm going to point out is stronger cash flow. This makes me feel a lot better about the operating situation. So the declining revenue situation is not bleeding over into cash flow, and the company is not cutting capital expenditures to improve free cash flow. Therefore, free cash flow remaining very, very strong for Honeywell. It is now over $4 billion on a trailing 12-month basis, despite being it was $2.5 billion 3 years ago. So quite impressive free cash flow growth out of Honeywell. Something else I want to look at are the returns. The return on equity remains above 25%. It had dipped below 25% for a few quarters last year. It is now back above and staying above 25%. ROA, return on assets, also going from 9% a year ago to over 10% now. So the returns for Honeywell are getting better. So is the free cash flow. The other thing to note is, despite the drop in revenue, this is a quarter-to-quarter look at earnings per share on a trailing 12-month basis. Earnings growth is continuing for Honeywell, and I know it's off from 4% a couple quarters ago, but it's still above 2%, which is probably the trend line on this chart here. So overall, seeing good operational metrics out of Honeywell. I want to note that, being a value investor, I do look at earnings multiples, and I'm seeing that the stock's trading at 16 times trailing earnings, just under 15 times forward earnings. The stock continues to beat earnings expectations, and going forward, this is a forward 12-month look at Honeywell and the forward earnings. They're looking strong. So Honeywell, for me, is a buy. It's simply a buy. I think that the company is strong. It's handling its revenue issues well, and there's no reason to believe, looking at this, that it's not a $120 per share stock. So Honeywell continuing to do great things. And I hope you found this video informative, and happy investing.